Ladies and gentlemen, welcome back to the channel. You have some insane things happening on the day with AMC. The short interest is exploding higher. The cost to borrow rates are exploding higher. But really a big story of this, I think, is the short interest, because that is at a definitive record since June of 2021. So typically when the short interest is this high, it does eventually lead to some form of a rally, and I do think this time around can be and will be a lot more explosive. So let's get into that. Let's talk about the data, a little bit on Tesla earnings and why the markets are up today. And then we will go over the technicals, guys. So let's get into all of this information. Hit that like button and subscribe to the channel if you have not already, and consider sticking around a while. So let's talk about what's going on in the markets today. So the S&P is up 0.69%. The Nasdaq up 1.21%. Russell 2000 pretty much break even on the day. The Dow is up about 0.3%, and this is coming because obviously Tesla had better than feared earnings, and the demand picture looks very strong for Tesla, and that's something not a lot of people were expecting. That has led Tesla to rally like 9 or 10% today. It's been very aggressive. Now, you also have the US GDP that rose 2.9% in the fourth quarter, more than expected, even as recession fears loom. So this is huge, because right now the markets, since the Fed is, I should say, going to stop raising rates pretty soon, the thing that the markets care about is a recession, because ultimately if you get a recession or even an earnings recession, that's when the Fed will ultimately cut rates. But when that happens, that's where more downside comes. Historically, if you look at the federal funds rate, let's do it actually. Look at the federal funds rate. It's never been cut unless there is economic pain. So the markets are trying to figure out, when does that economic pain come? The bond market is saying that's coming by the end of this year, with the bond market pricing in 1 to 2 Fed rate cuts by the end of 2023, and the Fed flying in the face of that, saying no way are we going to cut rates. Well, if the economy goes to shit and the stock market falls a lot, yeah, they will, especially when inflation is somewhat under control. So that's a big reason why the markets are up today. If you start to see good GDP prints, if you start to see good personal income and personal spending reports at the same time inflation is going down, but you're seeing good economic reports, that's going to be the best case scenario, is to get inflation down and to not see the economy crumble. Anything that suggests that is going to happen, like today's GDP report, is going to be positive for the markets. So this is really good, especially for AMC, heading into AMC's earnings, because I do think earnings could be a huge catalyst to send the stock much higher, guys. And that really comes down to, like I've said before, free cash flow. It comes down to net income. If they have either one of those things, that's going to be game changer for AMC. You know, AMC has traded as a stock that is unprofitable and losing a lot of money throughout the last couple of years. Markets didn't care too much in 2021, but 2022, that was the main priority, was to be profitable. Even a little bit, just a little bit was okay, but if you're unprofitable at all, stock didn't perform well. Your stock didn't perform well in 2022. So now 2023, it's going to be the same story. And for those companies that can actually break through and make a profit, they're going to be rewarded very nicely for it. And projections are that that's going to be the case for AMC this time around. Now, let's get into the Ortex data, because we did get a official report of the short interest here today. So let's get into it. The official report for the short interest that was for January 13th, it came out today, was 22.6% short interest. Days to cover at 4.76. 0.6. Now, the estimate for the live short interest since January 13th has us at 22.82%. The amount of shares currently sold short of 117.5 million shares. Now, cost to borrow rates continue to go higher again today. From Interactive Brokers, the cost to borrow rate is 103.1%. Cost to borrow average of 278.03%, and cost to borrow max of 305%. Cost to borrow minimum at 1%. So these numbers are at pretty much highs for all of 2022, especially the short interest. You have not seen the short interest this high, not including anything else that is happening behind the scenes, just the legal short interest. You have not seen it this high in a very long time. You have not seen the cost to borrow rates this high in a very long time. Heading into a major catalyst coming on earnings. Now, earnings will be down the line quite a bit. Earnings are not going to be next week. They're going to be that last week of February, if not the first week of March. I don't think it's been fully confirmed yet when the earnings date is going to be, but the longer we hold up at these levels, it's going to be much better heading into earnings. That's really the long story short. Let's take a look at the option activity, stock go tracker data, and then take a look at the technicals. So the option activity, very negative on the day, positive order value of 7%, 32 orders totaling $8.55 million. So very negative, call it that. Now, stock go tracker data, let's go ahead and refresh this. 12,357 calls that are in the money for this Friday. 140,000 calls that are out of the money for, again, this Friday. In the money puts at 32,865. Out of the money puts at 43,869. So you are seeing a decent amount of option activity. And my base case is not for a huge gamma squeeze, but it's possible that you could see a lot of gamma activity throughout the rest of this week, especially if you do get, a move tomorrow. It's possible. AMC has remained super flat, honestly, for this whole week, which is very, very surprising. If you take a look at AMC and where it's currently at, you're holding above the key squeeze level still. This is the level that we were at before the June call it mini short squeeze with AMC in 2021. So you're above that, and that is really what I want to see heading into earnings. And I mean, you've been pretty flat over the last couple of days, but you're holding support right at this level. That is actually what I want to see to a T. I want to see support being held at this level, especially by the market makers, because that is who is keeping this stock at this level precisely. It's going to be the market makers. It's going to be the people that control the market. So this chart looks really good right now. You want to break out above this descending line of resistance. If that happens, that is when potentially it is game over for the short sellers. Now, before we do go ahead and wrap up this video, we're going to take a look at the economic data coming out tomorrow that will again give us a big move. So you have core PC price index month over month for December, 8:30 in the morning tomorrow. Personal spending month over month for December coming out at again 8:30 in the morning tomorrow, and personal income month over month coming out tomorrow as well at 8:30 in the morning. Personal income, you are expecting that to be pretty strong at 0.3%. Last month's reading was 0.4%, so a slight decrease. Personal spending month over month, you're expecting that to go from a positive reading in November to a negative reading in December. And core PC price index, you are again expecting another 50% drop from 0.2% in November to 0.1% in December. So pretty reasonable expectations here. Some are higher than others, but overall pretty reasonable, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one. Hey, say bye, apes. Say bye, apes.
Bye, apes.
Say go AMC.
Go AMC.